You know, if we count the one buyer that we showed the most properties to, it's going to be in the 50s and 60s. So
Wow.
yeah, it is. Yeah, but it's not great.
Yeah, they do recognize value of time, because every single home that I've shown them, they've done a drive-by a day or two before to see if they like the neighborhood, if there's too many kids on the streets, what it's like at nighttime. And they're like, yeah, we'd like to see this one. So I'm like, I appreciate that. They haven't found the right place yet.
Yeah. Yeah. Sounds good. Yeah. And the other thing is get them writing, like get them used to writing offers. So then when the one property does come up for them, it's really simple. Like they don't even look at the contract now. They don't read through it. They just trust you, and they know the few subjects that are on there, and they just click through it. All right.
Okay, everyone's here.
All right. So, any questions from the weekends? Any wins you want to share? Where are we at? Craig, you were overhearing us. How was your weekend? You're on mute.
Can't hear you, Craig.
Yeah.
You look good though, but we can't hear you.
Anyone else have a question from the weekend? Any activity?
You can always type it in the search box, Craig, if you want, if you have a question or something. Good morning. And David, just to add to that, I know you do buyer consults. One of the things, if you get that sort of list of must-haves really clear, like whatever it is that was open, like a lot of the questions you can probably answer from the listing, if it's in the floor plan or if it's in, and some of it's like you just got to get inside the house, but you can really narrow down those things, because I've had clients like that it's like the je ne sais quoi kind of BS where you're like, okay, we have to get in there to satisfy your mojo or whatever we're talking about, and it sometimes you just take more, man, too. So it's pretty good hourly rate overall if you remind yourself that.
Yeah, I got a weird question. Is there an approach for a certain listing agent in Maple Ridge that does not post the interior photos until about 7 days after the listing's been up? Because we've seen 2 properties of theirs, and anytime that I ask, I go, are the photos coming? And they're like, yeah, in a few days. Is it a thing?
It could be that they're like getting photos done too late and they don't have anything to put on MLS, so they just have their cell phone pics or something up front. I don't know who we're talking about or what it is. So
it's a name that we would all recognize, and the one part of the team is older than Father Time, so it's not like they're new.
Telep. So
yeah,
I think that's just poor design of a. So like, it's called the perfect launch when you list the home, and whatever you strategize is how it works. But I talk to it when we have the perfect launch. It's a really clear that you want to have your photos, you want to have your strata docs, you want to have everything in your hand before you hit the MLS. You can provide all that information. You're not waiting on strata docs or photos or videos or floor plans or whatever to put it up. And then so when you hit the MLS, it's only maybe 15 minutes on MLS without all that stuff attached to it.
Right.
You guys are busy and you have to like get to a computer to do that sometimes, and you're on the road or whatever, but try to do it within a couple hours, not a couple days or a week. It's embarrassing. It's not good service. And we as realtors, buyers, agents need that information.
Yeah. What the second time that I asked about it, it was like, oh, just book in a time on Saturday and you'll get to see the inside regardless. And I'm like, fuck.
Yeah. Why don't you just take a picture of your dog's breakfast and send it over, and then we could all. It's unfortunate that that's. Don't get me started. I think is probably the easier way to do it.
Yeah. Fair enough.
Yeah.
Yeah, that shouldn't be regular practice.
It's all standards out there, guys, and that's the thing is we here have higher standards than most other brokerages, and this is a coaching program. And then there's other people in our office that have even higher standards. So we look up to people in our office that do a really good job of it. and there's people that don't have anywhere to look up.
Yeah.
So
Okay.
you see that. Yeah.
From a buyer's perspective, you get automatic emails from your agent, and then as soon as you get an automatic email, most people check it right away to see if that's the house that they want to see over the weekend or if they can get in as soon as possible. If there's no photos on those listings, most people just close it.
Yeah.
Like, it's that important to get the photos up right away.
Yeah.
And then they might
My
not go back to it.
buyers, when the listing goes live and they get the photo coming soon, they're texting me. They're saying, "I think this might be worth seeing. When are the photos coming?" And I reply back, 3, 2, 1. I'm like, I don't know.
Yeah.
Any minute.
So yeah, before you list a property, make sure you have all the strata docs in hand. Everything's accurate. You know what the pet bylaws are, the rental bylaws. You know where the storage locker is. You know how many parking spots it's got. All very important information that you should know prior to having a listing on the market.
I'll share an example of a mistake we made last week, where I went to the seller. I said, "Okay, get your cell phone out, go to your banking when we're filling out the PDS." And I said, "What is your strata monthly fee?" And he pulled it up. And he said, "It's $290." So we put it on the listing at $293 and change. As he pulled it off of his strata, off his banking. So I'm like, at some point I have to trust that that's accurate. And then we got the Form B, and I didn't double check it. And so the Form B was at $360. And so that was on the MLS, and the $70 difference, right? And $70 to me, or some of us on here, isn't like going to make or break our monthly budget. But for the buyers that wrote the offer, saw the Form B, they're like, "Well, that's just too much money." And they were done, and they're out. We lost in multiples. We lost one buyer, and then another had to tell them and explain it. And then by the end of we had no offers. Wow. So that was, and so we have a pregnant wife, and she's real excited about the husband's miscommunication about that. And I'm like, just blame it on me, blame it on me, blame it on me. So taking it for him that, anyway, we got it together, but that is super important to have a check. Like if you're taking that, so obviously now it's in our double check, triple check for all of us to make sure the Form B adds up to the same on the PDS, and that information on Paragon is the right amount. And double checking the bylaws, like Roger said, making sure that rentals are allowed, making sure that all these things are accurate. Because if you're putting information out there and it's incorrect, who do you think they're coming back to?
Yeah.
So
and it's not enough. It's not good enough to get the strata docs from your clients just because it's free. Like, a lot of them will give you a stack of paper with stapled sheets in there. That's not good, because if they're missing a strata document and it mentions that there's going to be plumbing repair, or they're going to replace all the balconies, and just a little blurb in one of the months, the council meetings, and that's missing, then you're on the hook for that repair when the buyer finds out that there's a levy coming down the pipe. So the only way to do strata docs, whether you relist a property, it's your own like whatever, just order the documents like as you're supposed to, directly from the strata manager, because that's going to completely take the liability off of you.
Yeah, order them early too. Here's the thing: is that if you order them when you get the offer, you're going to get a rush fee, and then you're going to have, instead of like the $150 fee, it's a $400 fee. And so you're going to list a property, you're going to sell it. If you're thinking you're not going to sell it, you're probably it's a wrong mindset anyway. So as soon as you get that listing contract signed, the next day go on before noon, because they charge you for an extra day if you do it after lunch, just so you know. I want to make one more example of you guys learn from our mistakes. So actually, I'm not going to talk about the mistake. I'll talk about the opportunity. It's when you guys are going out and looking at buildings and condos and looking at properties, you have a resource of hundreds of agents that have already bought red strata docs, have an opportunity to give you some insights into a building. Is it rain screened? Would you buy in this property? Would you have so looking back, recent sales, or like, for example, we had a property in Poco that someone on my team put an offer in on, and they actually did the inspection, and it was just like, there's something wasn't right. And so we called Matt Bastian and said, hey, bud, what do you think of this property? He's like, oh, don't show it. That thing's not rain screened properly. And like the inspector did catch it and we talked about it, but instead of paying for an inspection, spending days on it, if you got a property and you're not sure about it, ask one of the senior agents. Like a Bastian, like he's bought and sold in every condo in Bath and all these other guys that are like Trevor Street. These people have years of experience in buying in these buildings. So instead of trying to like figure out if it's going to work, just ask someone, put it in the cafe group, whatever that is, and they'll give you the thumbs up or not, whether or not you should be pursuing that complex if you have any doubts about it, okay? Especially stuff built in the 90s, you know, like the Poly B is a big issue, that kind of stuff. Like, has it been rain screened? So just get that information from our group instead of putting your buyers into a spot where they need to make a decision if the depreciation report's ready to have these big assessments or whatnot too. So anyway, that's something that I'd like to implement more of and actually have like a library of like thumbs up, thumbs down on buildings, like that simple, right? Or what the expected costs are. And I think as a group, KW does a pretty good job of informing each other of it. We could still do better. If you want to be the strata guru. And one other thought, since you guys are a lot of people building a business, whatever your farm is, you should know the stratas inside or out. Let's just say, for example, your farm is Riverwood in Port Coquitlam, or if you're in Burnaby in Metrotown or whatever, having you can go look back at previous listings and look at the bylaws and look at the depreciation reports and then take notes, right? And once you have done, like, you know, there's probably 15 stratas or something you have to look through. You could just do like one a week or whatever that looks like to you, and then have a little library going of it. But so now when you have people that come in and go, hey, we're looking at this building. Oh, that building, yes. Pull out your sheet if you wish, or just talk to it because you know it so well. Oh, they got piping coming up in 2 years. Windows are coming up. They got they had a special levy last year, and they are yeah, a good solid buy otherwise. But here's what we need to be aware of. Like, how does that make you feel as far as expert, confident? How does your buyers view you as a professional, right? So wherever it is that you guys are focusing on, I would strongly suggest starting to think about understanding the areas that you work in that intimate of a detail. You can write a blog about it. You can get SEO to it. You could actually have this on your website and people will go to it and funnel people to your website because you're the Riverwood condo townhouse expert or wherever the areas you're working at. Does that make sense? Does that give you guys some, like, it's not a hard exercise to do, but it is something that takes a little bit of time. And then you come out of there with like a bachelor's in your farm area, which you can use the rest of your career.
Totally.
Mm-hmm. There are people that specialize in like 4 buildings. I have a buddy, his mom built her entire career of just knowing this one strata, and it's just 4 towers in Burnaby. And she just, like, you want to talk about knowing a strata inside and out, she's like at the AGM meetings, she's there like taking notes, and then like everyone just knows she knows like that's the realtor for them. So she probably does 20 or 30 deals out of those 4 towers every year. And then the rest of her business, right? So easy to farm, just pick a spot. If you live in a building already, that's probably a good start. You should be selling in your own strata. So there you go. Anyway, there's some insights. Anyone else?
Does everyone know what rain screen is and what we're talking about, 90 stucco? Is anyone confused about that?
Can you recognize stand in front of the building? Could you show a client what a rain screen is and isn't? It's okay to say no because I didn't, and I'm in construction for way too long. So
I have no idea.
So just the backstory of this is in the 90s, a whole bunch of builders went from BC to California for conferences in Florida. And there's this new material called stucco, which was really good in California and Florida. It's malleable, it's cheap, it's quick for builders. And people loved it. They all brought up a whole bunch of this stucco material into BC and started building a lot of low rise, some high rises, but most of them were concrete. But a lot of low rises and townhouses out of the stucco material. Lo and behold, what happened was that material traps a lot of moisture inside the walls, and it started rotting the building and the wood, and then like all the water seeped through the buildings, and then this soon became the leaky condo crisis. So in order to repair a stucco building, what they have to do is they have to put what's it called?
Mesh.
Yeah, in between mesh. Yeah, in between the walls, and you can actually see it. So if you look at a 90s stucco building, it's kind of like that popcorn material, and it's usually like a pastel yellow or a pink color. Like they're not pretty buildings anymore. But yeah, you'll see like in between the levels.
Flashing.
What's that word?
Flashing.
Flashing. Yeah. So it's like this line between floors, and if you feel under it, there's mesh. Same with above windows. And if you see that, it's all rain screened. And rain screening is a process that eliminates leaky condos. However, it costs a building like millions of dollars to do. I've seen buildings cost from $3 to $6 million for about 100 units. So, you know, if it's $3 million for 100 units, the average place is paying $30,000 out of their pocket to get this repaired. And like in the 90s, what were condos worth? Less than $200,000 for a 2-bedroom, less like around $100,000.
Yeah.
And so they'd have these AGM meetings. They would say, "I'm sorry, you live in a leaky condo. There's no warranty. Warranty came into play in 2001 after all this." And so you go to these AGM meetings, and people were just like in tears, and like some people, they almost went bankrupt. Some people just up and left. And it was pretty devastating for anyone who experienced it. And till this day, there are condos that are made with stucco that aren't rain screened. So please, don't sell your buyers into anything like that.
I'm going to share my screen real quick just so you guys actually understand it, and then we'll move on. But the easiest way for you guys to tell this is if you go to like the front door or wherever you can find a space so that has the stucco, and you can actually stick your finger behind the stucco between. So if you guys can see my screen right now, if you can fit your finger in there in that little area between, like this is going to be plywood or particle board, and then this will be your siding, and then there's space in here, and this allows the water that if it gets in, it breathes and allows the water to run out and then drips back out here. Does that make sense? And if this is just like on the actual wood, there's no breathability, and there's no way for that moisture to escape. And so like the simple thing happens is it rots, it molds, and it deteriorates way too fast. And that's what happened with these California guys that built it all wrong for our climate. So you'll see between each floor, this is a flashing that Hiroshi is mentioning, and then just allows, but what they have to do is they have to put these straps in, the strapping in, and then they have this mesh that goes on the strapping and allows the water to just flow down around it. Okay, real simple. But if you get to the bottom, you can stick your finger up, and there's like a 1 or 2 inch, like 1.5 inch gap in there. You'll feel it, and you're like, okay, that's done properly. But what some buildings do, and I can show you an example of some of them in Etobicoke, is they cheated, and they got a grinder, and they actually grind out a line between each floor, and they stick flashing up there. But they didn't actually give that space for the breathability. They just stick it in there. So it's like this, it visually looks like it's been rain screened, but it's totally not. And then you're still having that rot problem. So,
can I just add, I took the course at BCIT for rain screen. It's more than just stucco though. It's about a system, and this system was implemented in 2006. So anything built before 2006 probably doesn't meet that step code. And so it's actually there's an entire system to building a proper rain screen, and it's dealing with all materials. So it's actually like a positive, a literal screen to keep water away from the interior wall, but it's also to do with insulation and drying within that process. So because in some of these older cases, it created a bit of a vacuum, it would actually suck water up, and that's where you have within underneath the roofs and stuff like that, you would see a lot of rotting or at the base around where let's say concrete walkways were put up. They had no transition between those, so again, water gets sucked in and it rots away. But it became extensive because, you know, a lot of the issue is within strata, because strata, unlike say commercial properties, there was no plans in place in terms of maintenance. So although people wanted to do maintenance on the houses, they would always kick the can down the road, and they wanted to keep strata costs as low as possible, which was actually the exact opposite they should have been doing. And in some buildings downtown now, they actually have commercial property management companies that have quarterly maintenance that they have to perform on these buildings, and that of course prevents it. But a lot of people don't want to pay for this. So long story short, the system has actually been implemented in 2006, and it's actually a process to a passive house. So it gets progressively better each year. But anything built in BC prior to 2006 will have some type of issue because it just didn't meet code in the first place. And especially condo.
So Nick will be teaching a course at KW on this next month.
I can give you all the material. I've got the whole course. So if you want to go through it, I don't want to remember most of it. But
yeah, that's interesting. You took that course. That's cool. Was that through for a construction company or something? Or
it was, yeah. I started in window and doors at a high-end place called Innotech. And a lot of Innotech, it's European tilt and turn. Their windows are very high grade, so it's more like passive house. And so rain screen is significant. It's really what most people discuss now. So like that's the beauty with everything within the last 10 years, and even earlier. If you can find condos, especially within the last 5 years, you're going to get a significantly better product for your clients. And if you look like Civic Center, Surrey Civic Center, that place is it's attached to a hotel. And that hotel, because everything was built under the hotel, all of the upgrades in it were hotel level. And they're, even though their strata council is still volunteer, they've actually implemented paid hours for their strata council. And the reason is because they brought in a professional management group to deal with the maintenance so that they could mitigate this. Because what it does is, as the building deteriorates, it deteriorates faster the less you do, of course, right?
Yeah.
So that's why you have, like, any building from the 80s and 90s is in terrible shape. Right?
We actually had a class Josh used to teach on how to read strata docs, depreciation reports, that kind of thing, which I think is invaluable for our industry to really know that. So that was something you'd probably want to chime in and maybe have a say in that too, Nick, because it sounds like you've got some serious expertise there, and something you can just bring to your clients too, right? And I would even have that on part of your bio or something, man, to let people know that, you will not, of course, when you get in one of these buildings that's masked in the way I was saying about they kind of did a cheer course, it's still hard to pick it apart, right? Anyway, I hope that gives you guys some basic insights. Thanks for sharing, man, into what the best way to protect our clients is it really is reading the strata minutes and that kind of stuff, and the depreciation report. They do have engineers that go in and do this for a living, so they should be able to pull that kind of stuff apart and say, this is where we're at. And if not, like, talk to us, talk to the other agents, like, hey, have you written on this building? What's the story? What's the back end on it? So So now I do want to get into this real quick. We had an announcement last week, but we didn't do. I just got off to the races with our class. So that being said, we are creating a couple teams within coaching, so we have some competition. So I call it the doors versus the callers, but I think it's really more just people that are ready to get rocking here, that have done all their classes with Carol. So these are the prerequisites. So you've completed all your
Contracts
class. You're deemed to be an R2, we call it, which means you have everything. You're capable of going out in the streets without being dangerous, and you're showing up. You're consistent in this classroom, and in our coaching, and are engaging. And so from there on, we're dividing up in teams, and there's a little bit more accountability within the team, as well as some camaraderie. You guys are going to help each other out. You're going to have scripting partners and knocking partners, calling partners, whatever you want to do within the team. And then there's going to be some reporting there, and then we'll have some contests. And so keep it fun, keep it light, but also I find some healthy competition is always good. And we can talk some smack too, which is always the bonus. So yeah, I'll step back, and Amin and Hiroshi are gonna run the draft here. So we're basically, if everyone gets baseball terms, this is sort of where we're gonna go with it. So if you guys understand, like a single, a double, triple, home run, that type of thing, grand slam. So those are going to be the points scored with it, and we'll get that out after this week. We just want to iron it out, but right now your teams are getting set, and you guys can contribute to some of that as we're building it, because we are just building from scratch. So hope you guys have some fun with it. Amin, Hiroshi, you're up.
Sounds good. Amin posted a link to write in your numbers too. So
that's the part. Your number.
Yeah, I was just gonna touch on that first. So regarding tracking and numbers, the one thing we're going to do moving forward is because we are giving out leads on a weekly basis, daily basis, depending on when they're coming in. For those that have not put in their numbers for that week, if you are eligible to get a lead, you're not going to get a lead unless you've filled out that the tracking form. It's just, we just want to make sure whoever's getting the leads is sort of on top of everything and engaging with us. So just something to note for you guys. Yeah, Hiroshi, you want to dive into this draft or?
Sounds good. So we'll just go in alphabetical order.
Sure. Let's
do it. Andrew Thompson, you're with Amin. Arsh.
You guys should do it. Amin selects.
We need some music in the background.
Yeah.
Bulls entrance music or something. Play the Bulls entrance music.
Oh yeah. Arsh Ranger, you're with Amin. Cindy Kella. I was proud to select Cindy Kella for the 2021 draft from the University of British Columbia, Saunders Division. David Sella, you are with Amin. Dylan, I don't know if Dylan's in the room. There's a lot of people I don't see right now. So you're with Amin. Erica Middleton, Amin Bra. Estella, you're with me. Francis Cruz, you're with me. Jane Kondradova, you're with myself. Hang on, I gotta scroll down here.
Jane, you gotta celebrate us. I know you're on there, Jane.
Good stuff.
There we go. There's the energy we're looking for.
Maz Artelani, you're with Amin. Manveer, you are with me.
Yay.
Right.
And Tazzies,
What does it?
You're with me. Roger Parmar, you're with me. Shannon Dupuis, you're with Amin.
Yay.
Thomas Civica, who actually capped, if you guys were at last meeting, he just recently capped. So he was on my team, but now he's on the R3, which is really exciting.
He's on my team. Yeah.
Yeah.
Woo.
TJ Dub, you're with me.
Congrats, Thomas, by the way. Way to go, brother. Proud of you, man.
Thank you.
Yeah.
Just to kind of get into the different teams. So we're between us, we're gonna sort of have like a weekly competition based on how many leads and all that kind of stuff that we're generating. And this is gonna be fluid as well, right? So me, I'm gonna focus more on cold calling, whereas Roach is gonna be more door knocking, and we may switch that up and mix it up a little bit, where maybe one week we all go together or something. But yeah, it's just more to kind of generate that internal competition between us. Hopefully get some excitement going. So I don't know, Hiroshi, you want to touch on how we're going to play this out? Or
We'll just do the numbers that Almond posted. Like you put its the tracking form. You put your numbers in the tracking form, and then we'll track it weekly, and they'll be based on how many listings you take, how many sales you get, and how many appointments you go on.
Yeah, and then we have closings and everything else for the home runs, right? So we'll be tracking those. You guys get single, double, triple, 4 points for a home run, that type of thing. So yeah, you guys want to obviously support your teams and be out there. Undrafted walk on, Mickey. if you didn't get.
No, I don't think my agent approved the contract yet. I haven't heard my name, did I?
Hold on, get back to it.
Yeah, is there like I think, did you say there was another team as well, Chris, or something, or maybe we're not on the?
I have it once you cap, you're on my team, and then we get to a different level conversation. So
Okay.
Put him on Hiroshi's team. It's the winning team. Woo!
Yeah, we are excited about this. We're gonna level up our accountability too, and so
and these
channel, right, where you guys have a closed channel within your team, you guys can chat that way.
I mean, these teams are going to change as well. You know, as people sort of move on to the next phase, or you know, people that are they kind of finish Carol's classes and they're ready to jump in and take on more. So you know, it could change weekly, it could change monthly, depending on how people are progressing, right? So
for sure,
you gotta be in R2, and then we'll draft you.
Nicole and Mickey will sort you guys out here. Just making sure nobody else. If we missed you, just type your name in there. We're going off a signed contract as well. So if you haven't signed the coaching contract, that might be why you got missed. If you did, sorry about that. We'll get that sorted.
Awesome. Any questions before we get started on the course material? We're doing finance and investments today. Good daylight savings, Monday morning, numbers, financing, all the exciting stuff you guys got into real estate for. Like, all joking aside, it is very important that you guys run a business, and that that you balance your books, and that you look at your P&Ls every day, at least once a month. If you're running a big team, and you know, in the MREA, Gary Keller says, if you are doing $1 million business, then you have to look at your P&L once a week. So the more business you do, the more you have to look at your P&L. So, you know, create it now, so then you can get into the habit of updating it every month. And these are in the wiki sites as well. Present today window. Okay. You guys see that? Finance and investment?
Yep.
Yes, no?
Yep.
Yeah,
Yes.
we're good? Okay, thanks. Thank you. All right, so again, this is on the wiki sheet. Like, the most basic concept of a P&L or balance sheet is to track your profit and losses every month, so you know exactly where you are. So at the most basic term, you're going to look at your revenue incoming. So for our business, this would strictly be commission, GCI, gross commission income. And you subtract your expenses. There's two types of expenses that we'll go through. There's soft costs and hard costs. And then that's going to be your profit, or if it's a loss, it's in brackets. Like, this is the most basic accounting, and it's very easy to do, but you'll get a nice picture. And once you do this for a few years every month, then you'll have a really predictable business. Okay. From your profit, which is your net commission, you got to pay the tax man. You can try and get away from it. You can try and incorporate, but at the end of the day, the taxes always get you. And then that's your net. So that would be like the most basic balance sheet that you can create. Under expenses, you know, the great thing about being a realtor is you get to write off a few things. The main two being your car and your phone. So, you know, we all have these expenses personally anyway, but as soon as you become a realtor, car payments, gas, insurance, oil, tire, any kind of repair, that's all a business expense. However, your accountant will ask you what percentage is business and what percentage is personal. You know, personally, I've always done, I think, 81 or 82%. And then your phone, you get to write off as a business expense.
I was going to actually ask a question at some point about this, so I think this is a good time, but I just have never looked into financing or leasing a car, but does it make sense to do that as a realtor? I haven't talked to an accountant about it, but what's your opinion on that?
Yeah, there's different opinions on it for sure. The cost for finance, the overall cost is going to be less if you finance a car. However, your expenses are going to be higher if you finance it as opposed to lease it. So it depends what your objective is. For like the past 7 years, I've really tried to lower my monthly expenses month over month. So leasing worked for me. However, the next car, I think I'm going to finance it because I don't want the lease to show up like as a negative on my income, so I can get approved for higher mortgages in the future. So it's an arm wrestle, right? There's pros and cons on both sides.
Yeah, I know.
Go ahead.
Sorry, Chris. Yeah, I was going to say the other factor in it as well is it depends the price point on the car. The higher the price point, it makes more sense to lease. Whereas,
okay.
Yeah, so there's a bunch of like different ways to kind of factor it. It depends on your accountant as well. I just have a conversation with your accountant and see what they think. But yeah, I mean, definitely the higher end you go, it makes more sense. Whereas lower end is probably a mixed bag. So
it really has to do with how long you're planning to keep the car. If you're a type of person that burns a car every 3 years and gets into the new shiny one, then it's lease. If you're going to hold it 5, 6, 7 years for sure, by all means, purchasing is the smarter move. If you're going to purchase, you should not buy brand new, drive it off the lot. You want to buy it like a year old. Someone else took that initial hit and you lose like 25, 30% driving off the lot. So buying a 2020 vehicle, you still get that new car smell, but you don't have the initial super expensive plus all the taxes kind of are reduced. But at this point, I'll tell you right now, in your career, I always thought it was important people consider what I drive. it doesn't matter. As long as you drive a car that's safe and clean, that's what they want to see. And they want to, no one's getting in your car, especially with COVID, but don't drive them around anyways. If you do drive them around, you need to have $5 million in liability. You must have that if you're going to put a client in your car. If you don't know that, talk to your accountant, talk to your ICBC people about it, because it is very important that you must have that as part of your license as well, for your real estate license. One last thing is that if you're gonna put clients in your car, you gotta don't do it. Just don't do it unless they're like your friends, your family. Let's leave it at that. Moving on. So
Okay.
yeah.
Cool.
Yeah.
Thank you.
Yeah, but if you're gonna lease, you can get it through a corporation. There's some savings like I'm talking about too, if once you get into the prec world. But end of the day, it's like they really are hand in hand depending on how you're gonna run your business as far as like the time you're gonna own the car.
Okay.
So,
Thank you.
Good question. Important.
Yeah, for sure. And as Gary says in the Red Book, always lead with revenue.
Mhm.
Like, don't get your license and then get a lease. That's $1,000 a month. That's just, you can't run a good business like that. You can't run from a business to off debt. Make sure you have a few deals under your belt, and make sure it seems like you have a good pipeline of clients that are going to buy and sell with you prior to getting into any kind of financial contract.
You do not need a black 3 Series BMW that comes with your real estate license. That's not a thing. I know that it seems to be the norm and everyone else does it, but that doesn't get you business, and all it does is put you behind in your monthly payments, like Hiroshi said. But there seems to be this idea that everyone has to go out and get a shiny car in order to appear successful. Sold signs are successful. Don't worry about what you're driving.
Low expenses is success.
Yeah.
Like, sure. if you take a business that's running at $65,000 in expenses, and you chop off $25,000, so you're running a $40,000 company, you just created 3 deals out of thin air just because you cut down on your expenses. So yeah, sell more houses, cut your expenses, and you'll run a very profitable business.
Can I just add on the mileage? We actually just did an accounting course, Lynn and I, for realtors. There's no benefit to leasing. It's just 59 cents up to 5,000 kilometers, and then 54 cents on the remainder. And there's no benefit unless you were to run fleets, like if you had a big team and you're going to run a fleet. But then you're talking about a company structure, and it's much more. There's not a lot of benefit. It's really, it comes down to mileage. So 0.59 for up to 5,000, 0.54 after. And one of the apps we use is QuickBooks. It's $20 a month. And one of its main features is that it automatically tracks your mileage. So you don't have to think about it. You just put it in your pocket. And we were told that you don't even have to specify who you're meeting with, as long as you switch it between prospecting and say personal use. That's all that the accounting requires, essentially. So, and I'm with you, Hiroshi. It's about 80% on my car as well. Like that's really where we went. But
that was what I was actually going to mention as the last thing. Is it's if you're over 80%, CRA is going to have a pretty hard look at you. So just keep your personal 20%, and then you can have the button on your dash that shuts it off and back and forth if you want, but as long as you're under 80%, I think you'll just be in the norm. So don't try to pinch past that. And then home office space is obviously something they used to look at a lot. I think that's really going to change this year. So
that will change, yeah.
Well,
if you have a home office, you cannot have another office. It's one or the other that you can write off.
The one thing we were discussing too was like how much usage, because before we were being super conservative and like just using the 10 by 10, but we have an office in like the living room for the kids because they're partially at home as well, and I'll use that, and actually have conversations with my wife about business in there or with a client. So now I'm writing off what this is from the accountant, by the way, is about 50 to 60% of the house I can write off and call it the office. And he says they have to prove it. Like in the end, it's up to them to prove it. So I really like that. Like it was the ball's in their court to say otherwise, and no one's going to come and measure your spot, right?
Yeah, the burden of proof is on CRA.
Yeah, exactly. So I really like that. Like that's some of our benefit is your home office and your mileage, right? So
definitely, yeah.
Can I ask a quick question about mileage? Because the idea of tracking my mileage with all the driving around and shuttling the kid up and down the hill, tracking the mileage sounds like it annoys me. Is it worth it to do for the tax end?
That's
why I say the 80% rule. If you're 80%, they're not going to raise an eyebrow. But if you're over 80, trying to squeeze out every dollar out of, I mean, if you had like one dedicated work car, you might do it that way. But if you were shuttling your kid and like just go 80%, because I'm the same with you, David. I would never be that person. Oh, this trip is for business. This trip is for groceries. This trip is for forget that. And there are accountants that do. I mean, I don't know. That's maybe someone in that world would love to do it, and that's not my world. So
yeah.
Okay. Thank you.
Yeah.
Talk to your accountant. What's that? Keep a log.
Yeah, have a good bookkeeper and a good accountant, and that'll give you good recommendations.
Well, they'll always keep a log, just so you're clear. So
yeah,
you get
and where you dance on the gray area is up to you.
But honestly, if QuickBooks has an app, it does all the tracking for you, and it's as simple as literally switching between that you are prospecting or that it's personal use. And it accounts every single mile you get in the car, it accounts for. And it's a huge write-off. Like for us, it can be up to $10,000-$12,000, depending on how much mileage you use. So to me, it's a no-brainer.
It's awesome. Yeah. All right. Thanks for that. Also CAP, board dues, education, council fees, like after you get licensed, these things keep coming up pretty quickly, and you notice that your credit card gets billed and dinged all the time, especially with board dues, Century Card, charity, council fee. It gets up there, so make sure you write all of that down. Keep track of it. Marketing expenses. So marketing expenses and CAP, those are, if you read the red book, that's in cost of sales. In other words, soft costs, meaning they'll go up and down depending on how many listings you take, how many clients you take on. But again, yeah, make sure you write everything off. Make sure it doesn't come out of your after-tax dollars. And accounting and legal fees. Legal fees applies more to PRECs, which we'll get into. PRECs are like PREC, you see sometimes. It's Personal Real Estate Corporation. We'll get into that. Any questions on balance sheets, P&Ls? Man, you guys are lively.
Hiroshi, I'll throw it in right now. I'm looking at accountants to get my stuff figured out this year. What should a new business look at to be spending on an accountant per year?
$100 to $500 if they're just doing the paperwork. Yeah, like if you have that QuickBooks app and you can just send them your bookkeeping.
Yeah.
The accountant I used to use, Margaret Kovacs out of Coquitlam, used to charge me $150.
Okay.
Yeah, that was awesome. Most accountants will charge about $400.
Okay, thank you.
Good question. Alrighty, budgeting. So let's say you get an $8,000 commission check. Woo! Sounds like it's a lot of money. So first thing you're gonna do is we're gonna take that $8,000 commission check, and Keller Williams is gonna take their share, their 30%. Share this with all of your clients, because there are people who out there who look at your remuneration disclosure and go, "Oh my gosh, you're making $12,000 off of this," and it's very important to clarify that you do not take all $12,000 of it. And at the end of this, you'll see that it's more like 40%.
At best.
At best, yeah. So you got your company dollar, your cap, that's going to take $2,400. Okay. I would recommend everybody call, is it Michaela or Naomi, and have them take off 20% of income tax off the top.
Just send them an email and they will do it directly. And
Yeah.
the GST. Both of those. So 25% comes off your check.
Yeah. It took me, I didn't do this for the first 4 years, and every like April and May, I was just sweating because I knew my next deal or two had to go to taxes. And like you would think like you're having a good year, where your business is increasing, and you're like, you know what, I could save this much money just to put it away for taxes. And then like you have to redo your license, you have whatever come up, you have property taxes, and then all of a sudden you're like, oh, well, I guess that next paycheck I was going to get is going to go straight to taxes. So please don't make the same mistakes that we've done dozens of times and have Keller Williams take away your income tax. Also, it's important to have a savings account for you guys. Minimum standard 10% into savings. So now we're left with half.
That's I don't know when my next deal's coming fund. And it should be also investing, but go ahead, sorry.
Yeah, and then we have our business expenses and marketing. So yeah, we'll definitely get into investing. Your savings will fund your investments. Business and marketing, you're putting money back into your business. And this is where, you know, we have to lead with revenue, is that you can't spend money on fancy websites and new cars and, you know, an office space or anything like that until you start making revenue, until you start having the deals pay for those expenses. And then when you do, the other thing that Gary Keller says over and over again in the Red Book is play red light, green light. So, you know, if you have a lead generating website, you want to turn that funnel on for 3 to 6 months and then turn it off and see if there's a difference in your business, and then repeat. I think one of the, like, as soon as you get your license, you get so many calls from marketing companies and notepad companies and print shops. Like, you really have to get good at saying no. A buddy of mine, like, it's not that he's a sucker or anything, but he's just so nice that it's very hard for him to say no. And he got caught into spending tens and thousands of dollars in his first year of real estate because they couldn't get him off the phone. And eventually he'd say, yeah, that makes sense. And as soon as you hear someone say to you, oh, it only takes one deal to pay off, like, run. If they tell you, we got this fancy website, it's going to give you 5 leads a month, it's $500, and you know that $6,000 a year. If you do one deal, it'll pay for itself. Like, if you hear those words, just turn around and run, please. Because you know, you look at all the expenses from the slide before, and you know it's not free to be in this business. We are lucky to have a capping company that we only get charged when we make money as well, and otherwise it's about $60 a month. So your take home after everything, to feed your family, to pay for your mortgage, rent, whatever it is about $3,500 out of $8,000. Yeah, and so I'm quite transparent with these numbers with clients and sellers as well. It's, if they start balking, I let them know that if they start balking on commission, I let them know that, yeah, I understand that $8,000 could be a lot of money, especially if the condo's only 400,000. However, that's not my take home. And considering my take home's about $3,500, like we're moving a $400,000 product, and it is one of your largest investments and assets. So, any questions on this? Wow. No questions. One question. Give us a curveball. We're here to help.
Is that surprising to anyone? Those numbers, is that we speak in a language that you guys are already budgeting for, and we're just going to move on? Because some people are like, we've seen it, and I know you've seen it probably as well, as you get an $8,000 commission check and you spend $10,000 because the next one's coming, and you just can't wait to get those shiny rims on your toaster or whatever it is that you're going to do to continue to make yourself feel better. But at the end of the day, it's not how you run a business. You got to reinvest in the business, you got to save, and you have to pay the tax man. And that's the big thing, is that there's a lot of money to be made in this business. There's a lot of money that comes out of your pockets and stay in this business. So like Hiroshi said, more people get into tax trouble in this business than anywhere else, because it's such a easy way to make quick money. But if you don't put that money aside, if you don't have Keller take that money off of your check, the 25%, the tax and the GST, you are going to have a scary first quarter every year, right? So just let them handle that for you, unless you are diligent about taking that money and put it into another account. That's not your money. You don't own that money. It's waiting. You can actually pay it in installments to the government. Once they figure out what your kind of consistent earning level is, you'll start paying installments, and then you get a very limited tax bill at the end of the year, which is nice as well. There's two ways to do that.
Hiroshi, we cap on our commissions. Is there also a cap on the royalty, and what's that amount?
$3,000.
Yeah, the cap on the royalty is around 52,000 in GCI. It's when, it's 50,000 even, because it's 6% up to $3,000. Is that right? 6% up to 3,000. Yeah.
Yep.
Yeah. So yeah. It's 50,000. So I guess I'll tell you one story. Is I was at this panel where there's 4 agents at the front, and all of them were 20 plus years in the business. And I guess in the 90s, they didn't really know that they had to. They all spent their GST money essentially, and they didn't save it and they didn't log it for maybe half a decade. And one guy said, yeah, save money for your taxes, because once I got a tax bill for $100,000 when they're selling houses for less than $500,000 at the time, like lower commission checks. The other 3 people on that panel didn't even look at him weirdly, or like everybody in the where our jaws are on the floor. We're like, what? $100,000 tax bill all of a sudden? And the other 3 people on the panel were just like, yep, I remember that. And they all had it. They all had the exact same story. And so I pulled one of them aside and I said, what happened? Like, what'd you do? He said, I paid it. I said, no. Like, what did you do? I couldn't understand. I couldn't put 2 and 2 together, where he just kept working, and for the next 2 years, he just worked to pay that tax bill.
Yeah. Josh Bath is a very similar story, actually.
I was going to name names, but.
Well, I mean, yeah. But I mean, he's proud of it because he's not in that situation anymore, right? Like he was making $800,000 a year, and he's hundreds of thousands of dollars in debt. Right? And it's like, how does that work? Well, that's why this is not it's a slippery slope. Once you get underwater with the tax, you have all these bills, you have all these expenses. It's a very dangerous game to play, where you have heavy overhead monthly budget, right? So stay out of that. And realtors are really good at spending, not so good at keeping.
So I have a question. So once you let them, Keller Williams, take 5% off, you don't have to worry about anything at the end of the year?
So your GST, they will send you a quarter. It depends if you do quarterly or yearly filings for your GST. They will send you a check, and then you just put that into your tax account or whatever. Okay, another thing, you need to have separate accounts right today moving forward. If you are running your business out of your personal checking account, that's a cluster, and you're just like, it sounds like a headache to me, but you need to have a visa, a personal visa until you get a PREC, and then you get a corporation visa. You get a separate bank account and visa for your business, and everything on your business, everything, gas, everything goes onto that card and that account, and then your personal stuff for your groceries and whatever fun stuff you do in your life is in that account. So you have 2 accounts, okay, minimum.
Oh,
otherwise you're keeping it a nightmare. And so to just kind of finish that thought, sorry, that that 5% comes off, goes into that account, and then you will pay it out as once if you have a bookkeeper, or you figure out what the remittance amount is, because you have the GST you charge, and then whatever you've paid out on your photos or other services that you have to do, that will be the difference of what you owe.
Yeah, I would put in your calendar now, if you're running your business out of your checking account, anytime you have an hour this week, just put in your calendar, open business bank account,
and get a credit card with points. Get like an Avion $100 a year card. You're gonna put thousands of dollars, put everything on that card, and you'll travel a family reunion every year for free. You'll go to the Bahamas, or wherever you put it on your vision board. Use this business. As you spend more money, you'll get tons of points. So
I have it. I love Avion. Big fan of Avion.
You travel, whatever it is, whatever your bank is, but totally, it's
Royal Bank.
You're spending it. So
thanks.
And when you incorporate, they'll give you your personal one for free. So now I have my wife uses the Avion one, and boy, we travel well because she just likes to rack that shit. So you Hiroshi laughs at me. Okay, for sure. So but it's if you're not getting those points, it's ridiculous anyway. Yep.
Sounds good. We often get this question: when should I PREC? Again, PREC stands for Personal Real Estate Corporation. So you're incorporating your business, and you become a shareholder of that business. In the chat box, actually, if you guys want to, we'll do the pros and cons. So type in there what you think is a pro to becoming a PREC. I got to wake you guys up.
I'm awake.
Yeah, maybe I'm not awake. I'm still living in Saturday's time. But yeah, what's the benefit to becoming a PREC? What do you think is a benefit? Lower taxes?
Taxes. All taxes.
Tax deferral, yeah. Over and over, I hear what? 60,000 and up. Could you elaborate, Brent?
Sorry, yeah. In asking this question, I keep getting the same answer, that when you hit 60,000 in commissions, that's about where you should be thinking about incorporating.
Well, yeah, we'll talk about that. I would say no,
okay.
But yeah, we'll definitely talk about that. Thanks, Rent. Lower tax. PREC is good when you want to keep some earnings. Yeah, retained earnings. Lesser take, how to avoid personal tax. Take home, yeah, for sure. Something else is, like, people might think that they can trust your company a little bit more, that you're not a fly-by-night realtor, that you're full-time, that you're in the game to stay. I found that accounting is somewhat easier when you're only paying yourself dividends instead of salary, but salary is a lot of paperwork. And if you really want to maximize your tax advantage, then you can pay yourself a combination of the two. Anything else? Any other pros? There's like thousands of realtors who are precking right now, and they all have to, there has to be a good reason. I heard prec is about 5,000. Yeah. So let's go to the cons of becoming a PREC. So Craig, you started us off. It costs about $5,000 a year. If you have a holding company, that's about right. It's about $5,000 to $6,000 for the accounting fees. Just the prec alone is $2,500 in accounting fees, and another about $400 in legal fees. That's annual. That's like a recurring annual fee. And to get started, it's another $2,000 one-time fee ish. So the cost is definitely more. Accounting 101 for realtors. Any other cons of precking aside from price? The money?
I mean, I'm not sure if this is already said or not, but if you get in trouble with the board, you get fined double the amount.
Yes, very good one. Yeah, if you cost something on errors and omissions, and they say it's a $2,000 fine, it's actually $4,000 if you're a prec. So you have higher liability. Thank you. Very good. You do have to file multiple taxes. So you have to file a PREC corporation tax, and then you have to do a separate tax for your personal income. So going back to your point, Brent, as far as how much should you make, like what happens is if you're a prec, you pay 12% tax on everything, on all of your income, on your GCI, okay? And then you pay yourself out either salary or dividend, and that's going to get taxed as a personal income tax, right? So really the money you're taking out is taxed twice. However, let's say your life costs $50,000 a year. You're only taking out $50,000 a year. So income tax on that's probably $67,000 right now. So you're getting if you make $100,000 GCI, you're getting the 12% tax in your prec, and then the $50,000 that you take out on your personal money is only $7,000 in taxes. Okay, so there's $38,000 retained that's not getting taxed until you take it out. So it's a great vehicle. It's kind of like RSPs, but if your life costs $100,000 and you're taking everything out, you're going to get taxed twice, ding twice. You're going to pay way more in accounting fees. So for anyone who's spending every dollar they earn, which is probably most realtors, it doesn't make any sense to prec. Now you're just paying higher accounting fees and you're paying way more taxes. Where it really starts benefiting you is if you start taking that retained earnings and start purchasing investments with it. So now your prec owns a holding company, and you have properties in that holding company that you purchased with money that's only been taxed at 12%. Again, well, I should disclose that I'm like no accountant, and I can only go so far as I know. But that's where you start winning. So I took the prec course at the board. The board has a really good course that's a half-day, 3-credit course all about PREC, and she's a CGA, a certified general accountant, and she said as soon as you can keep $10,000 in the business, you should PREC. Prior to taking that course, I thought it was much more. I thought it was like 50,000, just because it costs so much to run. Like, I don't know, if you can keep 10,000 and you're spending half of that on accounting fees, it doesn't really make sense to me. But you know, she's obviously the accountant. So yeah, if your business is making, let's take a whole different example. If your business is making $200,000, your life cost and the expenses are $40,000, right? So $160,000 is the net earning. Your life costs $60,000. You're going to retain that $100,000, and that's a huge benefit, because if you're not a PREC and $160,000 is going on your line 150 of your income tax, like line 150 is your income, that's going into your as an income. Every dollar after $100,000 is getting taxed at 43% right now. So that $60,000 is getting taxed $24,000. It's like, Jesus, I don't know. I'm freaking out over it again. But this is how I get when I start talking about numbers and when you should PREC. So there is a benefit to it. The other thing I would tie on is I would have 2 good years in a row before I PREC too. Like, maybe in your first year you save $30,000. You just never know in this business, and especially in a market like this. Like, a lot of us are starting to have really good years, and you know, thinking maybe I could PREC, but when there's an up, there's a down, and you just never know how your business is going to do in the next market. I'm sure you'll all do well, and you'll all be prospecting and picking up expireds and everything. But I think it'd be wise to wait 2 years before. Yeah. Oh, so here's another con about PRECing is that you have to pay 2 E&O insurance and 2 realtor board fees. So that $1,600 or so that you have to pay every year, it becomes $3,200. So there are a lot of costs associated with becoming a PREC. Any questions? Right on. You know, there's going to be a time in a lot of your business where it's going to click, and all of a sudden you're going to say, oh my gosh, I can't spend this amount of money. This is like, I've never even seen this kind of amount, like seeing this in the bank, and you're going to be high on life, and it's going to be awesome. So I'm excited to see that. And once that happens, I would love for everyone to really consider buying more investment properties or your first investment properties. I know some of you guys already own investment properties, and I think it's one of the best vehicles, especially if you have a holding company. So, you know, once you start getting the ball rolling and you know, making Ackerman type money, then you can get a holding company attached to your PREC, and then start your real estate mogul life and start buying investment properties. I would love, you know, I think a lot of you are in your first year business or in your first 3 years. Like, I would love for a goal to own an investment property in your first 5 years of real estate. That would really set you up. Like, we're seeing it now where prices are going up 20-30% in the last 6 months. And when you're leveraging your money with a mortgage, it's the profit. I would argue that you can't make that kind of margin on any other investments. Bitcoin might prove me wrong, but that's another story.
Safely, I think is the key. Is that you guys are insider traders. You guys have the information in front of you. You have deals. You have commission that you put into the deal to protect against any downsides. There's so much opportunity to be investing in and using the money you're earning in this business to put it into a property that the risk is gone because you guys can sell it for half the commission. You do have property transfer tax, which is the only downside in purchasing in BC, but you go outside of BC and use referral fees as a way to do that too. So there's just a lot of opportunities to put your money back into the market that you know so well. So don't pass all the deals on to your clients. Keep the best ones for yourself, right? Just a disclosure of interest in trade and then write up offers, and you will find ways to make it work.
Yeah. Yeah. Well, the best thing to do is like you could use your commission that you earn on the purchase to pay for PTT. It magically balances almost.
Yeah. Yeah. Your closing costs are almost nil then, right? So
yeah, a couple grand. But you know, the great thing about real estate is that you know it's always going to be worth something. And right off the bat, like you know the numbers, you know what it's going to rent for, you know what the hard costs are to run the home, the mortgage, the insurance, the strata costs, and the property taxes. So as long as you work the numbers, and I'll get into this today, as long as you work the numbers, you know that your mortgage is covered by someone else paying for it. And there's a lot of, there's just a ton of opportunity when we run into E&O insurance if we do our own transactions. Listing, definitely, because there's so much you have to disclose. I think buying, it's caveat emptor takes over, buyer beware. And so as long as you have a disclosure of interest in trade that you sign to the sellers prior to presenting an offer, you'll be okay.
I was actually just going through this yesterday. I'm sort of teeter-tottering on the idea of making my first investment, but it's going to be small, and I'm not really sure which one to do, and I'm trying really hard to find one. I just want it to be cash flow even. I don't need to profit. I just want to park my money there and leave it.
Yeah.
So I was looking into sort of if I could even write my own offers and everything yesterday. So the answer is yes, right? You just got to get that.
Yes. Yeah. I would be comfortable. If you're like really not, someone else could write it for you for I don't know, for a lunch, for a dinner. A case of beer goes a long ways, maybe. But I've written, like me, myself, Ackman, Amin, like we've bought lots of property writing our own offers.
The only person, whoever, you're never going to sue yourself. That's the whole point. Like the reason you're having someone else list your own properties is because your errors and omissions. If you put something on the disclosure statement, or you omit something or miss something or whatever, you make a mistake in representing the property that you're listing, you're in hot water, and that's when you get sued. You're not gonna, if you miss something in title and you sign off on title as the buyer, you made the mistake, right? It's not, I mean, if you want to have someone else look over the contract, that's what we're here for. But put it in your own name. Get the medallion point, whatever, right? There's no reason to have someone else buy. Not a lot of people understand that, so really not to worry about it. But 100% list the property with someone else, and you guys can negotiate deals. And usually, what happens is, you'll do all the work, and then you do the showings. They just put in their name, and you kind of figure that out from there. And there's a sort of a standard fee, or you can do it if you're doing it back and forth together. You list mine, I list yours, that kind of thing. So you negotiate that amongst other professionals.
If you're currently living at home or you're renting as well, your first property that you purchase, if it's a strata, try to find one that's rentals allowed. So you purchase that one, and then the next, wherever you move to, you keep the property and rent it out.
So I have a question then, a little bit off topic. This property I was looking at was a studio and apartment, and I haven't pulled any triggers because I'm just getting cold feet about resale and whether someone would actually be comfortable living there. It's 400 square feet. And what do you guys think about studios? Is it harder to rent those? I know we're not in rental, but what would be your call on that?
My opinion is that whether it's like a 2-bedroom, a 1-bedroom, or a studio, there is a market value to each of those things. And we're making investments for the long haul. Like, any investment, it's good to keep over 5 years. plus. If you keep it for 25 years, you've paid it off and that's all income. Rent will stay the same or go up usually. And so it's all paid for, but you know, the studio apartment has a value now that if the market jumps 30%, that it's not gonna get discriminated outside of that jump.
Okay.
Whether it's a 2-bed, a 1-bed, or a studio. I get that question a lot from investors. Is that is it hard to resell a 1-bedroom compared to a 2-bedroom? But you know, a 1-bedroom is priced 30% to 50% lower than a 2-bedroom because that's the value it holds. And then if the market jumps, it's gonna be across the board. And developers do a lot of research on how many of 1-beds and 2-beds they should create. So that heavy lifting is off of our shoulders, luckily. Yeah. So for me, it's like whatever price I'm comfortable with. You still have to put a 20% down payment, so it's a big chunk of cash. But yeah, in the future, the studio is going to sell. Yeah. Everything sells. It just has to be priced right. You can have the worst piece of real estate with no lawn and on the corner of Highway 1 and Kingsway. I guess those don't meet, but you know, if you price it for $1, it'll sell.
You can also buy a parking stall, right? You can buy concrete downtown, and you're now in a big market, right? So it will sell too. It will go up in value. So that's the whole thing. If it's a studio, like I wouldn't go the parking stall way. And you're right though, rentability is something that you want to consider. I would probably lean into a 1-bed just for easier rentability. And then so one of the things you want to do when you're looking at investment property is like, what is your criteria? If you're going to do this and replicate it, because you're going to do your due diligence, you're going to walk through and you're going to go so this is part of my investment plan, is to own these type of properties that are going to cash flow and so now if it's not cash flowing, does it work for you? Right? Are you supporting your property every month? And if that's an answer that's yes, then I think you need to reevaluate your long-term investment plan. If you're paying $1 to own that property, you're in the wrong direction. I know it's hard to do in Lower Mainland, but it is very important that otherwise you're negative on your books, which is never a good thing.
No, I just want to keep cash flow even. And so obviously townhomes are insane right now. Detached homes are insane right now. So would you recommend condo markets for investments right now? That's about it.
New development, you get into a pre-sale. And you know, the further east you go, the more likely it's going to cash flow by the time it actually, or maybe to save more money and put more money down, depending.
I'm in the exact same situation now, and we've changed our search from townhouses to condos. So I'm in the market for a 2-bedroom condo in Chilliwack. Write this website down: rentometer.com, rentometer.com. As a non-member, it's, you know, you get 5 searches, but this website is freakishly accurate on how much rent is. I used to tell my clients, go on Craigslist and see what places are renting for, but I don't know how they do it, but Rentometer is very accurate, and I trust it. And it tells you how much rent is based on the address and the number of bedrooms. So when you're looking at a home to rent out, you don't really care about the floor plans, maybe not too much the finishes unless they're drastically different. You just care about how many bedrooms there are and how many bathrooms, and that's going to set the rent. What I've noticed is that rent's gone up a little bit, so I would take the 75 percentile number on Rentometer, but you can use that number conservatively, and then you know what your net income is off that rental property, and you know what your expense is, because all you do is you add up your mortgage, your property taxes, your strata fees, and your insurance. And I have a spreadsheet for that I'll show you guys here in a sec. And you can go through any property and find out whether it's cash flowing or not. And the 3 ways to make income through real estate is, number 1 is cash flow. Although in BC, unless you go to Courtney, it's $100 to $300 a month in the beginning. 5 or 10 years from now, it'll go up. There's also mortgage pay down. Someone else is paying your mortgage. So if the cash flow is still even and your mortgage is $2,000 a month, probably about $600 a month is going towards your mortgage, which is awesome. So now you have a debt that someone else is paying for you. In Rich Dad Poor Dad, Robert calls that good debt. It is a good debt. Number 3 is the highest opportunity, is the increase in value. So you saw it in the last 6 months. You know, anyone with a home in the Fraser Valley or the Tri-Cities, it's gone up like 30-40%. Property values have gone up 30-40%. Condos will follow suit. I know not all the condo market has gone that way yet, but people are going to get priced out of townhouses and they're going to start looking at large condos, and then it's going to keep going. The great thing is that, you know, let's say you buy a studio in Chilliwack for $150,000, you put $30,000 down, that's 20%, $2,000 in closing fees. So you're in for $32,000. Let's say in 5 years that property goes up to $200,000. You've gained $50,000 of equity on your $32,000. So your return on investment is, you know, 133%, not 33%. Does that make sense? Like, the market's gone up from $150,000 to $200,000, so it's gone up 30%. But your return on investment is you've made $50,000 on your $32,000. And again, I don't know where you can get that kind of return on, you know, on the stock market, like consistently. If you look at, you know, you go back to the history of real estate in Vancouver and Lower Mainland, if you take a 15-year snapshot of any time in history in Vancouver, the market's at least doubled. I tell my clients this all the time when they're like, should I buy or can I just rent my whole life? And sure, you can, but know this about Vancouver real estate. Like, if you want to predict the future, we have to look at the past history. What were houses selling in Coquitlam in 2006? I recall they were like 500 grand, 600 grand. 1991, 15 years prior to that, actually my parents bought the house on Gainsbury in Coquitlam for $200,000. So it went from $200,000 to $500,000, and then now any house in Coquitlam starts at $1.2 million. So the proof's in the pudding that and now it's like 12 to 15 years, the prices of real estate doubles. But I can guarantee you can take any 15-year snapshot in Vancouver and know that the prices double. So you purchase your, you know, a 1-bedroom condo now for $300,000, it'll go to $600,000 in 15 years. Hard to believe, but yeah. So these are, you know, you can invest outside of BC too. The lenders will lend on pretty much any property as long as it's in Canada. And so I go on this website all the time. Can you still see this? Did that open a link for everyone?
No.
Sorry?
Does
that work?
Yeah, now it is. Sorry.
Okay, thanks. This website, I'll put it in the chat box actually, ranks the top 35 cities to invest in. And so, like I said, cash flow is hard in BC. If you're after cash flow, look in some of these other cities. Hamilton, really good. Brantford. An average detached house in Brantford is $426,000. So your down payment's 85 grand, and there's no PTT in Brantford, in Ontario. If 85 grand seems like a lot, partner with someone. There's a ton of partnership agreements that you can get, and now your down payment's chopped in half. Windsor, you see Detroit you can throw a rock at Detroit from Windsor, but their housing, the average house is $313,000. That means a townhouse, you're looking at $150,000 to $200,000 for a townhouse that you can rent in Windsor. You do need a property manager that'll take 8% off the top. If you have some of these, But myself and my sister, we flew to London 3 years ago because London was on the top of it's still on the top of this list. So it was number one. We looked into it. We flew there for a weekend, and then we picked up a townhouse for 200 grand. And it's still rented. We never lost cash flow on it, and it's building equity. So, if affordability or cash flow is the issue in BC, definitely look at other cities in Canada. Thunder Bay, we looked into Thunder Bay, like the weather gets to -40, which I didn't want to go there. So I just said no. Toronto's in there. Prices are high.
Yeah, Roshi, London's a good buy, man. It's a good university town. You're not going to have an issue getting a rental there.
100%. Yeah, the rent's really high because the renters have to compete with students. Like our insurance company doesn't let us rent to students, which I think is a good thing. But you got to think, like, all the renters there have to compete against the students, so it drives the rent prices up.
And plus, they do have some good graduate programs there too. So you know that the quality of students that you would be getting, they're going to be responsible people, right?
Hopefully, yeah.
Yeah, hopefully.
Yeah. So yeah, check that out. So another tool I wanted to show you, or what are we? 11:30. Okay. So in our wiki site, can you see our wiki site right now? Am I good?
Yep.
Yeah. I haven't lost everyone. Under financials right here, we've posted not just a sample profit and loss statement, but I've posted the investment property cash flow analysis, which shows up here. Like, this is something a mortgage broker, Kyle Green, gave to me, so full credit to him. All you do is fill in these shaded parts, and then it spits out whether you're cash flow positive, and you can try and predict future value, but usually in real life, your future value will be much more than what this spreadsheet predicts. And then it will give you an ROI. So for example, Jane, what price point are you looking at your studio apartment for?
Honestly, I'm just trying to keep it sort of under the $500,000 mark unless I'm crossing over into a 2-bedroom.
So let's say 500,000. You'll need 100,000 in down payment.
Yeah.
The rent. So I'm going to go to, which city are you looking in?
Okay, well, this one was a $350,000 studio in Pitt Meadows. It was that one. It's the cheapest condo in Pitt Meadows right now.
Do you remember what's
the address?
Yeah.
Yeah, it was in that 190A building with those balconies. Hold on, let me pull it up here. It is 319-12635 190A Street. 190A Street.
What was the address?
Oh, it is It's unit 319 and then building number 12635.
198. So I don't think there's a 0 bedroom, so we'll just say 1 bed, 1 bath.
Okay. There's another one in the building for a 1 bed, so we'll do it for that one then.
So again, the site's just incredible. Like, I've logged on to the pro version, so I get unlimited searches. But I use this. It's huge value for your clients, for any investor.
Yeah, I like.
Yeah, it's amazing. And so their median price, that's the conservative price right now, 1,400. But if you market your home and keep it vacant for a month and find the right renter, you could almost always get the 75 percentile number. So we'll put it in 1,650. So back to the spreadsheet, 1,650, and you said that was 350,000.
Yeah, I mean, I think it's priced a little bit high, honestly, because it sold in 2019 for under 300,000. It was 249, and then another studio sold for 275 or something like that. So I think 350 is a bit high. I think I could get it for 325, maybe.
If you're a master negotiator like Jane, you'll get it for 325. We'll go conservative on the numbers and keep it at 350. I think I just had a question on the chat box. 1 second. It says, how much is the membership for Rent-O-Meter? I think it was like $50 a year, $20 a year. Again, it's a write-off. You can log into different IP addresses and get your first 5. So when you start running out of searches, then sign up for it. But for now, just use the free version. Okay, so 1,650 is the rent. We went high on the price. Condo fees, $300 sounds fair. Taxes, $140 a month seems about right. Maybe it's higher. Let's go 160.
That's what it was, 160.
Yeah, not my first rodeo. Insurance, 40, 50, sure. Like $600 a year should cover it. So on this particular home, this spreadsheet is so brilliant, and you guys all have access to it. Mortgage calculation 1.85 on a 30-year amortization, with legal costs and everything. Location type in BC, so you can change it if you're buying in Ontario. Nick, you can find this on our wiki site. I know Libby had some issues getting into the wiki site. I want to get that figured out for you. However, on this side, on this right-hand side, monthly cash flow, $126.92. So to me, this is a go. This is a thumbs up. It does calculate your resale value again. In the future, you can reset that. But I don't really look at the future value part. I just look at whether I'm positive or not in my cash flow. You're making $1,300 a year. I'm willing to bet that you're going to spend that on appliances and microwaves, fans that break, and whatnot. But it's still this is a solid investment. Like, it's in Pitt Meadows. You don't have to hire a property manager, so you save the 8%. Property manager's right there. Yeah, I see no reason why someone wouldn't buy this.
Yeah, I'm kind of torn because it's so small. Like, I went and saw it, and when you pull, the bed's a Murphy bed, and when you pull the bed down, you would actually have to move your couch over to fully put it down. Like, it's extremely small. You know what I mean?
So here's the other thing is I was in Chilliwack yesterday with an investor, and the building was good and everything. We walked in the elevator, and there's like a cockroach rope warning, and then we see in one of the drawers like a strata minutes, and there's like a lot of break-ins and whatnot. We go outside, and there's like a drug deal happening right outside us at the door, and all of a sudden I'm like, you know what? There's just way too many red flags. Anywhere that I wouldn't live, I wouldn't buy as an investment. And it's just like Yeah, so like you still want somewhere safe because you will sell it one day, and you want, the area might gentrify, but you just don't know. There's so many opportunities out there right now
No.
that if you can't see yourself living in it, like, in your 20s or in your in your 30s or any time, then I would pass on it, because there are a lot of opportunities, and you can go outside of BC, you can go to the Valley, to Mission, and find opportunities if your budget's at 350. TJ says the same thing. Like in Chilliwack, I'm only looking at Sardis and Garrison's Landing now. I'm not really looking at those apartments on Yale. That was like the unit was fine and everything, but yeah, strange characters that you'd see on Breaking Bad or outside. So yeah, that was interesting. And we all drove. Like, my clients are from downtown Vancouver. They drove 2 hours to get there. I drove another hour, and we really wanted to make it work, but I just told them, no thanks. Upwards and onwards. While we're on spreadsheets, and I'm really getting you guys really excited about numbers and spreadsheets, we also have an allocation form. If you haven't done so already, please, it's really good just to find your overall personal expenses and your business expenses. This is what we mean by, balancing your checkbook, balancing your book of business to your P&L. So if you know what your life costs, you know what your business costs at a minimum, now you know what you need to make. And then the really cool thing is, on this sheet, it has your goals after you hit your nut, basically. Like, your 1 of 2 is your life and your business, and then after that you can save money for investment property, vacations, sponsor families for Christmas, max out your TFSA. We get questions on RRSPs, so you can use your RRSP as a tax shelter, just like your PREC prior to PRECing. However, if your retirement plan is to purchase real estate, in the future there will be capital gains tax on the profit. So if you purchase an investment property at $500,000 and then sell it in the future for $1 million, half of that $500,000 is going to be subject to capital gains. So your line 150 is going to increase by $250,000. Have fun with that. If you don't contribute to your RRSPs for those years, you can dump money into your RRSP and avoid a lot of the capital gains tax. So think about that before you use it as a tax shelter, and it might talk you into PRECing earlier. But that's a conversation with your bookkeeper, accountant. Did I go over that too? I feel like I might have lost you guys. How did I do?
So I have a question.
Yeah.
So you're saying wait 2 years to PREC and then until you hit 200K?
No. Wait 2 good years to PREC, but only PREC if you can save at least $10,000 both those years. So it might be $200,000 for someone, for me, but it might be like $400,000 for Ackerman, because his life costs a lot more than mine.
But the thing to consider is what Hiroshi mentioned is your expenses at the end of it. If you're not saving money at the end of your year, if you've spent it all, then there's no point in PRECing. You have all these costs to have a corporation, to have the taxes done, the actual board fees on two licenses, all this stuff adds up. So there's no reason to do it until some people are 200, like I said, some people are 100. If you're on a team and you have no expenses, so you can't, you're not paying for flyers and photos and all this extra stuff on a team, you could probably PREC a lot sooner. If you're putting all that money into your car and you have all this extra stuff that is getting spent anyways, or you're not saving it, then that's an accountant conversation. They'll tell you when it is, and you know money in your bank, and then you're getting taxed on that money at 40%, or you're getting taxed on it at 12. Make sense?
Yeah, thank you.
Glenn McQueenie was saying, like, you know, a lot of the awards that the board and then our office gives away, it's all about like your gross commission income or how many sales and how many deals you did, and et cetera, et cetera. It's like, it's all about how much income we get, but he would love to see like awards for someone who reduced their expenses the most this year. Someone reduced their expenses by 30%, yay, like they get this award, they get an Eagle Award, or someone grew their net worth by X amount, yay, it's like they get this award, or someone bought their first investment property. Like that's the kind of awards that he would love to see. And I tend to agree with them. It's, you know, you look at Forbes magazine and they're always, it's all they care about is net worth. They don't care about income or anything like that. Like Oprah is worth $4 billion. And so, you know, wake up every morning and say, what can I do to increase my net worth? What can you do today to increase your net worth? What's your next step? And like I said, like I would love for everyone, like in our coaching program in the first 5 years, to either purchase another investment property or their first investment property. It's so exciting. Like in times like this, when the market's going up and you're a real estate mogul like Amin, and he has multiple properties, he's laughing. He's saying 30% on every property that he owns, like the 900 properties. He doesn't own 900, but you know, that's, yeah, it's, it gets very fun. So potential opportunities is Airbnb. Like when I can already feel it when everyone gets their vaccines and things open up, everyone's going to go on vacation at the same time.
That's exactly what I'm thinking. That is exactly what I'm thinking. So I'm trying to find a building where there's no rental restrictions because I want that option, you know?
So look up 989 Nelson in Vancouver. They're allowing short-term rentals, and there's another building on Seymour that allows short-term rentals. That's a loft style.
Oh,
yeah. And
okay.
Nelson starts around 520 now, and like a one bedroom starts around 600,000. So I got a couple investors scoping that area out. And with this COVID and people working off, like outside of their office, downtown hasn't gone up very much. Like every other market, is all this started in the Fraser Valley with everyone working remotely. These properties hasn't gone up very much, and you can Airbnb them on a 989 Nelson, the BC Hydro building. So it's gonna be really nice. Buy, fix, and flip. That's an opportunity if you can partner with a contractor. There's a lot of costs, so you have to buy the properties at 60 cents on the dollar in order to make it work. I did see one over the weekend that was a very good potential. If you look at listing on Cardigan, that's, I think it's $325,000 it's listed at. It is disgusting inside. It was a smoker who's been there for many, many years. I was looking at it with a client, and we went in and we were out in 10 seconds, but that property would sell for $400,000 if it's renovated. And
okay, what was that address? Because that sounds really tempting.
On Cardigan.
Cardigan.
Yeah, in Lougheed area of Burnaby, North Burnaby. And it's, yeah, I'm sure he's probably got an offer now, but yeah, it'll go from 325 to about 400 if you put in maybe $30,000 worth of work, flooring, paint, kitchen, bathroom, light fixtures. And so if you get a contractor who gets deals, they could do it for a little bit less. You sell it for no commission, and that's the partnership, and then you can each make a small profit. But again, like PTT, commission on the buy side, the holding time, because the 1 or 2 months that you're going to hold on to the property, those are all expenses that you have to put into consideration before buy, fixing, and flipping. Any questions? That world I'm not too familiar in, so hopefully you guys can lob me a soft one if you have questions. Fantastic. That's what I want to hear. Okay, so let's now, I've done this before, and it takes a little bit of time, and we only got 9 minutes to respect your time. I want to go over, is everyone familiar with how our office runs on profit share? Has Ron or Carla gone over this? Just say no in the chat box if you don't know what profit share is, because I want to drive this home for everyone. Thanks, DJ. So the way our office works in Keller Williams, like right now, thanks, Craig, we have 320 agents. Our office turns a profit every month. Let's say in 1 month, our office has $50,000 in profit. 25,000 of that goes to our owners. It's actually like 26,000 goes to our owners, rightfully so. Just like every other real estate office, the profit goes to the owners. The other $24,000, they split and they share to everybody who helped them grow the office. Does this make sense? It runs on it. Oh, I lost Rob. Oh no! Is it because I'm not pulling up spreadsheets? That 24,000 gets shared between the other agents who help grow the office. So we call them sponsors. When you join KW, there's a line that says who sponsored you, and it would have been someone who helped you join the office, or yeah, like for myself, Josh Bath was my sponsor. So when I make a sale and I contribute towards the office fees and the office turns a profit, he gets a small share that's a profit share. It's to the tune of about $1,000 to $4,000 for every agent that you bring into the office. So if you help bring like 5 agents into the office, you could get complete passive income. You don't have to do anything. It would probably be around $10,000 a year, and it just shows up in your bank account, which is amazing. All you have to do is like introduce them to Ron. Is like the minimal effort that you have to do is just say, hey, so and so is looking to get more training. They're looking to change offices. They're struggling with real estate. They're looking to come here. Again, like they might benefit from our coaching program too. Like we do this, it's included in the office fees. And then you get profit share. So in the last 2 years, the office has profit shared between $200,000 and $300,000 back to the agents, which is insane. I do get asked, like, is this some sort of pyramid scheme or something like that? I do want to clarify, like, the difference between a profit share program and a pyramid scheme is you just look at the direction that the money goes. In a pyramid scheme, like, you're forced to buy products, and so you're spending, the people at the bottom of the pyramid are spending money that's getting filtered and siphoned up to the top, so the top person makes, I don't know, millions, and then everyone else loses money, and it's also illegal. A profit share, the company grows, and then the profits trickles downwards. So in essence, it's the opposite. But no, it's really good. There's really nothing you have to do. You just have to, if you ever meet agents and you talk about the training at KW, or you talk about the camaraderie and the people and the awesome Christmas parties, and they're like, huh, that's interesting. Just give them Ron's number, or give their number to Ron, and then Ron will close it, and then you'll start getting profit share.
or us, just invite them to this. Invite them to CMA classes or Carol's classes or anything you're joining and getting value from. Invite them to go door knocking, whatever it is. Like, here's the thing: if you see someone on this in your travels that is good energy, you feel like someone you'd like to work with, and you feel they'd be a good fit for KW, like, just bring them into your world and help them build their business. They'll be grateful. And that is why Profit Share works, is because if someone's in my downline, I genuinely want to help them do business because I will actually see profit from it. Not only that, because I like them and I want them to be successful, but there's actually a financial benefit to it. So that's why this works so well. And that's like, you don't have to BS people around it. Like, hey, I want you to be successful because I will make money when you do, and you can as well. Why wouldn't you? So if you bring in a capper, it's worth $4,000 a year to you, give or take, right? So every year they cap is $4,000. Do the math. That's a nice little side business. And like, all you're doing is helping someone grow their business and become professional, giving them training, giving them access to all the stuff you guys have here. This isn't normal. We don't do this. Other brokerages don't do this the way we do this. Like, we don't share our systems and tools and support each other the way we do, because we're cooperative, because I want to see David and Jane and Craig and Lynn, everyone else be successful, because it means more profit for the business of Keller Williams Elite, which means we all make more money. That's that cooperativeness, and you just don't get that at other brokerages. And if you've been at another brokerage, Nick just left, but as an example, he's been there. Lynn, you can attest to it as well. Like, this isn't how this goes usually. So when you're actually able to give people these tools and systems and build this out, this is an amazing opportunity. And it's just icing on the cake in all reality. It's just something else you can do as, a couple hours of your week. You might say, hey, you know what? I did a deal with someone. They were a really nice agent. I'll just introduce a warm handshake to Ron. Lo and behold, 3 months later, you get this check in the mail. You're like, oh, forgot about that. But you didn't, because you did it purposely.
Yeah. We love to see like positive people, someone like-minded as us, and they have to be education first. Like, that's why like and Chris, me and Carol, we love doing this, because we like to see you guys be education minded.
For sure.
Yeah. So yeah, it's we'll close up pretty quickly. Any questions on anything that we went over today as far as financing, investments? You have all the tools at your fingertips on the financial side of the wiki site, and I think David posted where the spreadsheet, one of the spreadsheet was. Thanks for that.
Yeah, and as things roll back in a normal world, Kelly Fry does an amazing job as an investment realtor specifically. If you guys ever want to join in on her, she does like a Thursday evening investment seminars, or you can join RAIN or some of these other investment groups that meet on a monthly basis. And that's a huge opportunity for you guys to network, meet investors, connect with people that are looking to kind of partner on deals for you, or whatever that is, whatever you're looking for. But you're in the business, you might as well have another leg of your lead generation being investments, right? And understanding how that works and speaking that language is part of that. So reading up on it, the MREI, Millionaire Real Estate Investor, the blue book, is a really good starting point. If you ever want to like give that as a gift to your clients once they've bought a house with you, now they're going to stay in the house for a long time. Now you teach them how to invest and they become repeat clients.
Yeah.
Right. It's a $20 book, but it could turn into millions for you. So.
Yeah. Before you go, like type in the chat box, like when you plan to buy either your first investment property or your next investment property.
And what it will be. What type of property.
And then when you've done that, you're free. You're free to go. Enjoy the Monday.
Go enjoy the sunshine. Look at those stack of papers David's going to hand out.
Woo.
I love it. Good job, man.
I'm gonna work on my tan too, because it's sunny out.